Hello everyone, my name is Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is December 27th, 2024, and this is precisely the roller coaster of price action, the whipsaw of volatility that I was referring to in the previous episode. I'm not going to say I got it exactly correct, but pretty close. Okay, so we're going to talk about that and what we can expect when and what we can expect for, sorry, I'm forgetting how to speak English. We're going to talk about what we can expect next for Bitcoin and where we can expect the next big move. All right, and we're also going to look at what happened since yesterday when we last spoke. So yeah, if that all sounds interesting, then watch until the very end. This is a quick update on Friday going into the weekend. Let's get into it. As you can see, Bitcoin on the 4-hourly time frame has been coming down. You can see it actually on the hourly time frame a little better. We've been coming down, okay? But there are a few things. Okay, so yesterday I said this, expect roller coaster price action, expect whipsaw volatility one way and then another. We have yet to complete the move up that I feel we're going to complete, okay? And I'm going to show you why we're still likely going to make a move up about 7-8% before the strong move down, okay? So as you can see on the small time frames, right, we've put in a few big red candles, but I wouldn't be too confused about this. This isn't the downtrend that we were expecting. This isn't the downtrend that we were discussing, the one that's going to take us down to 76.4. That's not it. And how do you know that? Well, for starters, if you zoom out a bit, you can see that this is all one contiguous structure, okay? It's all one contiguous structure. Sorry, this is all one contiguous structure. So this is our initial break of structure. We call that an A wave. A wave is synonymous with the initial break of structure in a correction. Remember, corrections occur in flavors of 3, okay? Flavors of 3. So this is your first sort of part of it. The second part is a compounded B wave, okay? And we talked about that yesterday, and we said that this was more likely than not a B wave. It looked a little funny, and I said it was likely a B wave because, and it was probably finished because this part right here looks quite impulsive, and we know the final leg of any corrective pattern ends in impulse, okay? But here's the thing, and I really want to make this point. Technically, that is the end of the B wave. What you see subsequent to that is a basing pattern. And that basing pattern took us all from here all the way down here on a basing pattern. And I can prove this to you, okay, in so many ways, obviously, insofar as you can prove anything on the charts. If you look at this, it's one wave. One pair of AB basing, okay? 2 pairs of AB basing, and a final pair of AB basing. It's 3 pairs of AB basing. It's basically 3 pairs of consolidation. This is all an accumulation pattern. Down and to the right, albeit down and to the right, but it's still an accumulation pattern. So basically, it's the pivot which takes you from the bottom of this B wave, let's call this our B wave, into your impulsive C wave. So at the end of the day, what you're looking at is an A, B, C wave. You can see this throughout the market in altcoins, right? So this is what we're looking at. An ABC pattern. And remember, whenever price changes direction, it has to put in consolidation. Consolidation from down to up is accumulation. Consolidation from up to down is distribution. Okay, that's using Wyckoff terminology. But that's what I'm seeing, right? And so even though we were technically accurate in calling the end of this B wave A, B, C, right, who's to know that the basing pattern is going to look like that? And the point I want to make to you is corrective price action is by definition capricious and unpredictable. And that's what makes trading corrective price action very, very difficult. And I'll say this, there are certain rules and guidelines to follow, or that, even corrective price action follows. And I'll give you a quick example. So if you are to count an A wave and an associated B wave, right? Like let's say this is A and this is B, that B wave has to occur within 1618 deviations of that A wave. If it occurs outside of that deviation, it cannot be associated with that A wave. Okay, I'll show you an example. If you take your Fibonacci retracement tool, let's say I want to measure this purported A wave, or I'll call it alpha, right? Because it's the third iteration, right? So let's say this is AB, this is small a, small b. It's hard to write with this thing. This is alpha, this is beta. Alpha, in order to be related to beta, or beta, in order to be related to alpha, better said, has to occur within this deviation. You see that inverse 1618 right here. So if that's true, then there's a high probability that alpha and beta are correlated or related. And if we get a move up from here, after having had 3 pairs of AB basing, then that is kind of your confirmation that this all was a basing pattern, okay? And so this is what we would call a bearish basing pattern. Bearish because it's down and to the right. But you can have a basing pattern that's orthogonal, right? Straight across. Or you can have a basing pattern that's up and to the right. There's no rhyme or reason, okay? And again, I think the best way to use the information that I share on this YouTube channel and others is to take whatever you feel may have some kernels of truth and backtest it, i.e. take the concepts and apply it on your charts by yourself so you really feel and you understand and you internalize these concepts, because it's just a bunch of theory at the end of the day unless you know it, because unless you know it, you're not going to execute in the pressure of a trade, right? Where you have, your kid's college fund on the line and you have to make an entry, right? I'm being a bit dramatic, because if you have your kid's college fund, I'd hope you're not making an entry with leverage. It's just a spot entry. Anyway, I digress. All that to say is, just really quickly, look, here's another example, just really quickly, and then we'll go back to Bitcoin, of a basing pattern. You can see it throughout the market. This is in Cardano, right? You have 1 pair of AB basing, 2 pairs, there's your 3rd pair, and then you have your move. Okay, you can see it throughout the market. So prove it to yourselves, and also prove to yourselves that it's very likely that what you're seeing here is you're on the higher time frame, an initial break of structure, just like we saw in Bitcoin, an A wave, okay? A compounded B wave, a flat correction B wave, that basing structure, and the logical conclusion to all of this, right? Because again, flavors of 3. A, B, C. You're going to likely get that C wave to the upside, and that C wave always goes in the same direction as the A wave, right? The initial break of structure. Then your entire correction, right? Because this is corrective to this this trend, then your correction is finished. Okay, so let's get back to Bitcoin with that concept in mind. So looking at Bitcoin, and having discussed what happened last night, because a lot of people, kind of are saying, oh, it's manipulation, it's a tether FUD, whatever. Look at the charts long enough, there's an explanation, and it's not like exactly what's going to happen, when it's going to happen, but it makes sense, right? It's not kind of like mysterious. Okay, there's a basing pattern, and due to the fact that the basing pattern is down and to the right, there's a lot of selling pressure. That's what I come away with as an analyst. Basing pattern down and to the right, okay, we're bearish. And that is a prelude to what comes next. Because if my basing pattern has struggled so much, right, I know that my C wave can be two things. It could be concerted, meaning short, it's not super bullish. It doesn't have all of this super strong buying pressure. And I know that once that C wave is finished and our corrective pattern A, B, C is finished, guess what? I'm expecting strong selling pressure because I saw a herald or a sort of the sellers are announcing themselves. They're kind of in the room. The selling pressure can be felt even here. So once this obligatory C wave prints, I want to prepare myself for that massive move that we talked about. Again, 3 flavors of 3. This entire correction is a correction on that impulse that we made from the top of 108 all the way down, right? That's that's the trend. That's the new trend that you could say is established. And this is nothing but a correction of that. Okay? So if this is an impulse, right? Corrective impulse, but impulse nonetheless, it's a corrective impulse. Let me try not to get too in the weeds. This is not pure impulsive price action to the downside. It is what we would call a corrective impulse. And I know that for a fact because the time it took to come down is not even close to the time it took to go up. If I had something that came down, let's say, just for argument's sake, it took 24 hours, and then the correction, the retracement, also took 24 hours, right? Kind of looked like that. Then I would know that's a wave 1, wave 2 situation. I'm in pure impulsive price action because in Elliott wave analysis, wave 1 and wave 2, the newly formed wave 1 and 2 of a trend are typically similar in time. Okay, there's a time component. Very few people understand that, and that's something I learned later than I thought that I should have. It would have saved me a lot of money and a lot of confusion had I understood that. I even forget where I found that. It was in one of the books that I read. In any case, I backtested the theory, right? Because I'm not going to take anything at face value, and I saw it time and time again. So it became a reality, and I started trading it. So I know this is a corrective zigzag. That's what we would call it. 5 waves down, corrective, and then a B, C retracement between the 0.5 and the 618 of that zigzag we call a corrective impulse. Okay, so that to say this, the minimum retracement of, so if this is an A wave, let's say this is an A wave, right? This B wave minimally retraces to the 0.5. It has to. Again, this is a principle, one of the few rules that you find time and time again in the 8+ years that I've traded and charted. It's always played out. Very few things you can say that about, very few things that you can say so definitively always happen in chart analysis. So when you're dealing with a corrective zigzag, right? A zigzag meaning a corrective pattern that looks like an impulse. So a zigzag is like this. I think I showed it yesterday. A, B, C, right? That B wave, let's say this is A and this is C. That B wave retraces to a minimum of 0.5, maximum of 0.618. Okay? So again, this is the A wave, because these are corrective patterns. That's a corrective impulse. This all is a B wave, right? This A, B, C that you're going to get, all of that is a B wave. It's fractal, meaning I kept calling this A, but it's A of B. This is B of B. This will be C of B. And then you get C. Okay, and we can even measure this. This is really, really good. And we have measurement for the length of C given the length of B and A. You can measure it. And that's something that, patterns that analysts have found over the years. We're going to do that in just a moment. So what I mean to say is this. Very practically speaking, do expect for Bitcoin in the immediate short term to hit the minimum of 100K, okay, 100,000, 191 on this chart, okay, and a maximum of about 102K. Do you expect for Bitcoin to come all the way here in this region, in the golden pocket? Okay. Again, once it touches that 0.5, we're live to go to the next phase of the correction. So zoom out real quick. And I'm not saying any of this is easy. It takes years to be able to see these things sometimes and to make sense of them, because it's not like in the textbooks where it's just a bunch of lines. It's a bunch. There's emotions behind it. There's your money behind it, and then a bunch of messy candlesticks. This is A. This is B. B's not finished. B comes to this region, and that is confluent with that bottom resistance, now resistance, previous support, now flipped into new resistance. And C is the beginning of our big drop. When you study corrective patterns in Elliott wave analysis, very few people take enough time to study corrective patterns. I'm going to say this. I'll say that the knowledge of corrective patterns may be even more important than the knowledge of impulsive patterns, because most of the time the market is in chop. The market is in correction. Very quick example, and I hope this is useful to you all. If you think about it and you look at it and you study it, most of the time market's doing this. It's completely unpredictable. It's going side to side. It's chopping here and there. And then fewer times it's doing something like this. Fewer times it's doing something like we're going to get in a moment, that C wave. This is where you make money. This is why trading is so difficult, because you're seldom in these phases of the market where you just go up or just go down, right? You have a very defined, predictable, emotive sort of price action. Most of the time it's side to side, it's chop. So the best traders are able to read with a relative ease, with a relative literacy, these side-to-side corrective patterns, discern them, enter trades within them. So, using sort of the principles like I just said, like, okay, if this is my last and final alpha wave or whatever, my last and final break of structure, my counter is going to be within 1618 deviations. I'm going to hide my stop behind the 1618, get in, and I know that C wave's coming, so I'm going long. That's advanced trading. Most people can't do that. Most people don't even know what I'm talking about when I say this stuff. You know what I mean? Obviously, there are many ways to trade, but all I'm saying is that this chop is where traders go to die, metaphorically speaking. Accounts go to die. So that's what I'm seeing on the charts. And if you really want to get good at trading and charting, be very comfortable with this chop. Be very comfortable with every nuance of corrective price action, because most of the time you're looking at a chart, it's going to be corrective price action. And you may have to wait, but understanding the corrective price action enables you to get in and prepare yourself for the impulse where you really make money. Okay, so let's get back to that really quickly. Hope that was useful. I hope not to make these too long-winded or to digress, but I really I wish I had learned that. I eventually did, but it took a while, and it took a lot of trial and error and a lot of blown accounts. In any case, when you put in your zigzag, okay, and let's label this, and this is really like dissecting the anatomy of this price action, because thus far we've gotten exactly what we've said we were likely to get. Okay, that is confirmation that our reads thus far have been accurate. It's likely, then the probability of what comes next is higher because we got the preceding moves. Okay, so here's an ABC zigzag, not a flat zigzag. Remember, a zigzag is an ABC where the B wave comes between the 0.5 and the 618 of that A wave. Okay, so again, expect Bitcoin either tonight, early tomorrow, to hit the mark between 101 and 102, or 100 or 100 and 102, whatever I said before. Now, what comes next, and I said this yesterday, that C wave, and I've had the experience of it. I remember trading this. I remember getting caught unawares because I'm like, oh, we're going to do another consolidation, a distribution, so I have time. No, you don't have time. In these ABC zigzags, you don't have time. And I'll prove it to you. Look at this, look at this, look at this. I'm getting excited here. Look at this. Do you see any such accumulation there? The price shifted on a dime. Boom. It just went down, hit its mark, boom. Okay, there's a likelihood. Again, I can't say 100%, but there's a likelihood that once we get to this region, boom, we go into our C wave. So be very careful about that. Be very careful about that. I've, in the past, read perfectly a zigzag, was trading it up or trading it down, I forget. I still remember the chart. I don't even want to go too deep into that memory. And I remember getting left behind in the trade because I was expecting some sort of consolidation that I didn't get. And I was like, I can't believe we didn't get a consolidation. That's not supposed to happen. Oh, man. The stuff you learn trading, it's life lessons you'll never forget. Because I remember, I don't know why I remember. Maybe because I lost money on it. Maybe, yeah, I probably lost money on it. So I'll never forget that. I'll never, ever forget that. So I'm preparing for it right now. So I know, okay, we get to the 0.5. Maybe I'm taking profit on my long at the 0.5. And then as soon as we get in the 0.5, that is the minimum retracement for that, for the B wave. I'm already preparing my shorts, right, for that C wave. And what I want to say is, sorry, it's taking me so long to get this out. The C wave can be measured. We can already measure it. It goes between, so you can use the Fibonacci extension tool here. Before we get, I don't know what the hell I did there. Before we get the C wave, a proper measurement of the C wave, we have to have a completed B wave. So the way you measure the C wave is you take the length of that A wave, right? The retracement of the B wave, right? However high it goes. Let's say it goes to 101. Let's take the median, or the median. So the middle of 100 and 102, 101. That C wave is likely to hit between the 1 and the 1, 2, 3, 6 Fibonacci extensions. So that first wave, expect it to come down to between, let's say, just roughly between 83 and 86K, which a lot of people think is the final target to the downside, which it's not. It's just the first wave. This is the first pure impulsive wave. And what you should see here is we're in pure impulse, i.e., once you go down in 5 waves, you come back up in 3, and the time it takes to come up should be the same time, more or less, that it took to come down. Does that make sense? This is what you should look out for, high probability read on Bitcoin's price action. And as for when we can get this over the weekend. And I'll tell you why. Typically, you don't get big moves on the weekend because you're creating what we call CME gaps. The traditional markets aren't trading, and so you have to make up for the lack of liquidity when the traditional markets are open again. But this isn't the case here because this entire move down, let's zoom out real quick. Let's take this off and zoom out. This entire move down, remember, is a balancing of the move up. It's just a retracement. So all the CME gaps were formed here. They're going to be filled here. They can be filled on a weekend. So we can get this move on a weekend because it's just a balance of this, and the liquidity already exists. Does that make sense? I hope that's not confusing. We can get this move over the weekend. So if once we get up here, prepare to go short, prepare for the big dump to happen. And again, the first wave down is between 83 and 86. Second wave down, right, is the next wave down is the third wave. It's probably going to go much lower. And then finally, I think we get a small sort of respite here, come up, and then go down. So yeah, something like that. So that's what I see in Bitcoin's price action. I hope that was helpful. I hope that was useful. Last but not least, we're just going to have a quick look at some indicators. So looking at the US dollar currency index, of course, the USDXY is inversely correlated to Bitcoin, i.e., if the US dollar currency index goes up, Bitcoin goes down, and vice versa. As you can see, the US dollar currency index has been basing itself, okay? And we have this massive basing pattern, and it's basically kind of just consolidating here in accumulation. Given that the traditional markets are going to close in a few hours, this is not going to be a factor. But do expect that when we do open up late Sunday, we start back up again. That's going to maybe take us down a little more once it starts moving to the upside, okay? And let's have a quick look before we leave at the Bitcoin dominance. And Bitcoin dominance is doing almost exactly what I said it would, okay? We looked at this just yesterday, so I'm not going to be obnoxious and splice my clips of what I said from last video into this video. I trust that if you're watching this channel, you trust me to a certain extent not to completely lie about something I said one episode ago. And if you're interested, you could just look at the previous episode. It's on the channel. But I said that Bitcoin dominance was likely to head down to this target at the very least. Obviously, we can make a lower low even, right? Because these are corrective patterns. Again, they're capricious, they're unpredictable. We can go down here. But I said that it's likely, given that this is a flat correction, okay, that Bitcoin dominance come to a minimum of the 786 of this, right? Because that's the minimum rotation for a flat correction. And then the maximum is 1618. So between 786 and 1618 deviations of this. So that's what I expect to continue. And as Bitcoin dominance goes down, that indicates a movement of positive price action in the markets, in Bitcoin and in altcoins. So that's the move up that we're seeing, right? I think that we're going to get that in the altcoins. And you know, you can see it throughout the altcoins. You saw it. I showed it in Cardano. You can look at Ethereum. it's the same thing, right? You're putting in, on the small time frames, the final leg of an ABC correction, i.e. that C wave. Again, your breakup structure was your A wave right here. Your B wave was like this. This was your basing structure, very clear in Ethereum. You see that basing structure is orthogonal. It's nice. It's three spokes down basing. And so you get A, B, C. And again, that C wave's likely to come to between the 0.5 and the 618 of this larger A wave. Okay, so if you look at it as a zigzag, just like Bitcoin, that's A, B, C. Okay, so that's what we're seeing throughout the market. Again, studying, being comfortable and knowledgeable of these corrective patterns really does make the world of difference. So many people, when they hear Elliott wave analysis, all they think about is 5 waves up and 3 waves down. That's a very small part of it. I think really the magic of Elliott wave is in the corrective price action, the corrective patterns that you learn, and how Ralph Nelson Elliott explained how they form, and being able to use those mathematical deviations to understand, okay, where can I set my stops and still be in the trade if this is indeed a flat correction, or if this is indeed a zigzag. All right, that's all I've got. Hope this was helpful. Hope this was useful. Like, share, and subscribe. If you got value, consider buying me a coffee by Venmo, Cash App, or sending me Litecoin at the pinned comment below. And remember, my crypto portfolio consultation service has a few spots left. A few spots because I spend 1 to 2 hours per month with you all, and I look at up to 5 assets, help you balance your portfolio, and give you key entries and exits per month for each one of those assets. So that's something that I'm offering, and I've started offering it because we're going to go into a bull market very soon in Q1 of January, I believe. And so, yeah, it's limited because I'm only one person. All right, take care. I'll see you next time. Bye.